little Daft Punk post lunch to keep us moving.
Can you guys hear me okay? Yeah. I was thinking about I need something with a good vibe, good energy post lunch. Who doesn't love Daft Punk? So yes.
Indeed, no, it's a good pick. And again, I appreciate you making the time to do this. I wanted to have a conversation with you specifically. You've been working in music rights, investing in this as an asset class well before it became as big and popular as it is now. So you've definitely seen a lot of waves for not just how this asset class operates, but where the market is right now. But as here we are, back half of the year, 2025, what's your read on where the market is right now for investing in music rights?
Yeah, I would say that I'm gonna take us back a second to your point. We've been doing this for now a decade. For everyone's benefit, we invest across film, television, music, games, sports, but music has been a center for us for the past decade. And I would tell you that a lot of the questions we get asked from the community, which is, hey, like, what do multiples look like, or how vibrant is the transaction universe? And if it's transaction oriented, I'd say the following. One is there is a lot of capital looking for opportunity to invest in this sector. And there's folks that have left the marketplace, investors, there's new entrants that have come in. And on the other side, so I'll call that like the demand for the music. On the supply side, when you think about those that are looking for liquidity against the rights, so artists, songwriters, producers, mixers, labels, etc., there's actually a very good supply of opportunity for them to source capital against their rights. So I think it's a vibrant ecosystem right now. I'd say that activity has picked up in 2025 relative to 2024. Why? I don't know. I'd say that there's a lot of speculation. It's like, hey, is that what's driving this? There's a view that interest rates are going to go down, so now there's more demand. I don't think there is that strong of a correlation between that. I actually think I've heard some of the stats today, maybe because of some of the slowing growth. When you look at your earnings as someone who's taken in that cash each year, and you're like, oh, it's not up to the right as much as it used to be. Do I think maybe this is the right time now because maybe I'm not giving so much up in the future? If that was a mindset in the past, I don't know. But we're seeing a lot more activity in 25 relative to 24. It's both on the supply of capital and the supply of deal flow. Hopefully that gives some color.
Yeah. And I think too, with where the market is right now, you mentioned a number of new entrants. It's an interesting marketplace because I assume that with that, there probably brings in people that have different incentives, how they look at deals that may be very different than how Shamrock may look at deals. Do you feel like the market is perfect in a sense that everyone is doing the math, everyone sees what the expected projections are? Or do you see some of these deals and you're like, oh, wow, I did not think that was going to go for that? Like, what's your read on where things are?
Yeah, I would say that I think what I'm seeing from at least the capital side is that folks are creating like unique lanes that maybe didn't exist or weren't as bifurcated in the past. Let me give you an example. Like there are certain funds that are just specifically focused on Christian music or country music or smaller deals, less than $10 million, or really big deals. And so I think that you're right that there's a lot of data for all of us to look into and say, hey, how do you price these types of rights? That is an analytical approach. I think that everyone has maybe a little bit of a different take on how they apply their analytics to the situation. That's kind of step one. But beyond that, I think where you're going, Dan, and I agree with you, is that there's also qualitative factors that drive to outsized outcomes. What I mean by that is, do you need that first deal to prove that you're now on the map? And you need to lean in to go make that happen. We see that. Someone might be looking for a vintage or a genre that they don't have in their portfolio and they want to plug that in. They might kind of lean into that moment. For folks that are looking to protect market share or protect administration, when you're protecting your own turf, you have a different type of defense mechanism for the marketplace as well. So yes, there's analytics, but there's also, I think, qualitative factors, human factors that come into play that maybe lead to some of these outlier moments that you might read about.
That's what I wanted to get into because I think a lot of people know that's the case on the record label side with signing artists, right? You may see a deal that happens here and be like, oh, why did this artist go here? This thing may have been publicized. Well, you don't know that this person had met this person when they were coming up and they were doing their thing, and then that relationship now continues. Or like you said, someone has to prove a bet and they haven't had a win in a while. So, okay, let me make a gamble here where another firm is sitting on powder and not necessarily needing to do that. So that's what I wanted to get out because I think some people may view your world as being more analytically driven. And maybe relatively so it is, but it's still a relationship driven business, and a lot of these qualitative factors do play a big role.
Yeah, I think the relationships just in general play a large play. Like it's a meaningful factor in any of this activity that you read about. At the end of the day, right, you're talking about someone's life's work, or maybe not their full life's work, their recent successes. And if you think about how do these opportunities even come about, many from you in the room, right, where you're managers, you're lawyers, you're the business manager, and you're representing that client, and it's not like JP Morgan or Goldman Sachs is for the most part coming out and selling all these, these rights. It's usually other folks that are closer to and have a tighter relationship to the party that's looking to get liquidity against those rights. And that representative goes to hopefully folks that they know, like, and trust to say, hey, here's the group of folks that I think are best situated to participate and have the opportunity to own these rights going forward. And fortunately, like, I'll speak about Los Angeles. Like, Los Angeles has become the content hub of the world. And there's a lot of folks that live in this area. They're personal friends, they're professional friends. And when you do a transaction with somebody and you're kind of in it together, that builds camaraderie. Same thing what you're talking about, Dan. If you have a relationship at a label and you've been there for 10 plus years, you're like, and you have a good relationship with them, they're going to get the advantage, right? So yes, dollars and cents matters. Yes, you need to pay a fair price, but the human part is extremely important for the most part as well.
And I know in music specifically, you own a wide range of assets, and you've also bought and sold rights for some of the biggest artists in the world, maybe even the biggest artist in the world. It would be good to hear from you. What is it like when you are in that type of position, and how do you go about that process compared to everything else in the portfolio, just given the importance, like you said, it's life works for most of these artists?
Yeah, and what we've made one sale in music, that's it. And that was a unique ingredient, a unique variable that we thought was appropriate. But everything else in music, everything we've acquired to date, we still own. So 10 years in the making. I think this is also something that's just maybe a little bit different. Talk about different strategies that are out there, which is for us, we're building this for the next decades. It's not about just an amalgamation of rights, consolidation, and then going to go sell it off to another party. We've been investing for 10 years. Other than that one sale you're talking about, we own everything else. We're buy and hold. And so we're thinking about this long term. We're thinking about the industry long term. We're thinking about how to optimize these rights long term. I think it's different than some other folks, not knocking them at all because we all got a business to run. But we're fortunate at Shamrock to have the right investors that say, hey, we want to back you for the long term, and we want to own, because ultimately where's your capital come from? We want to own this for the long term as well. So that's kind of one part of the equation. The other part is like dealing with elite talent and whatnot. And I think that goes back to the human part, which is you gotta have trust. You gotta have great communication. You gotta be integrity driven. I call it like super simple things that everyone should do that doesn't always happen. And so,
Like what?
I'll tell you, like for us, when we are in any transaction, that probably with many of you in the room, we come in and we tell you we're going to pay one thing, and we show up exactly with that number, and we do it on a time frame that surprises you of how quickly we can move. We prioritize everything we have on our plate because we're being selective. We're fortunate to have the ability to pick and choose who we want to do business with. I was a former banker. I was in the service industry, completely different, right? And so nowadays we have this great opportunity in front of us to put our time and energy into things that we really care about.
I think another piece where different firms that invest in rights may approach things differently is what they do after they own the asset. Not necessarily on the sell side, but more so some believe we're buying and holding, the returns are great, we're going to manage this asset as such. Others believe in actively trying to work the asset. And depending on who you talk to, people can be quite dogmatic in their belief one way or another. What's your take on that?
Yeah, I think this goes back to like infrastructure, and are you gonna like is it about like passive rights versus active rights? Yeah. So I'll speak to ourselves, and I'll talk about the industry overall. So like for us, we are active. Actually, we pursue active rights where we could control administration or own the copyright, or we're okay acquiring or investing in passive rights where we can't do much. We're collecting from a PRO, or we're in the artist's share of shoes, and that's okay too. We do both. For us, it's about putting our fingerprints on timeless content. So whether that's active or passive, we're following quality or commerciality or perceived durability, and that's what matters most to us. Once we own it, we think about, okay, how do we optimize that content, that music for the long term? One, we're going to do the simple stuff, right? Metadata cleanup, audits, the analytical stuff that most financial firms do. What we also do is we think about how to make those songs relevant for today's culture. And we're not going to build in-house infrastructure to go do that. We're going to leverage partners to work with them in an aligned capacity to go figure that out. And I'll say whether the rights are active or passive. Because you might say, hey, Jason, if you just got that writer share, why are you working it so hard? Well, if we're finding value because we have the ability to think creatively or have access to content creators through our private equity portfolio, which is a whole different side of Shamrock, but we're big private equity investors across growth areas of media, entertainment, communications. Those investments are highly strategic to how we intersect our music rights or our film rights or TV rights. And if we can create value for everyone, let's go do that. So that's more of our mentality at Shamrock. So we're kind of more universal in that capacity. But you're absolutely right. Some folks have said, hey, you need to have administration. You need to have a sync department. There's varying degrees of perspectives there. Mine is to the extent you can partner with the folks that could do a great job and you can create alignment of interests. There's a lot of other parties on any given song, right? So to think you could just do it yourself is kind of hard for me to believe. You need to always bring in partners, and so we believe in that as our model.
And to my understanding, this is an area of the business that you've invested in seriously, right? It's not just you spending time, whether it's these partnerships, they all cost money, but it's something that you are budgeting for because not just about valuable it is, but because it makes a difference for not just what you currently hold, but as you're evaluating what's out there.
Yeah, no, we would say that you need to reinvest into your rights because right now the rights might be relevant and they might be streamed and they might be on the radio still, but I think you need to think about the next generation. The example I give a lot is I see it in my own household, so my biased research here, which is my wife and I find new music largely through streaming right now, through the DSPs. New Friday playlist, whatever it is. My daughter, who's 14, discovers music only through TikTok, and then we'll go to Spotify to listen to it. And then my son, who's 12, only discovers music through Fortnite. And so I use that as a data point to say, okay, if you're not thinking about a gaming strategy for music discovery, then something's wrong. Right? We got to think about where we're going to attract that next fan, that next consumer who might not find it the way we found it. And so that's kind of more of the way we think about, how we want to reinvest on our content is how do we make sure it's relevant for generations to come, so long as the music or the film or the TV show warrants it.
Is there anything specific that you all are doing on the gaming side?
We are actively investing in gaming portfolios. So outside of music, and we invest in films. So we own films like a piece of Avatar or Shrek or the Rocky franchise. And in gaming, we've been spending a lot of time in the Roblox universe. And we think Roblox or UGC gaming is a really interesting space to be in. So we backed a business who just acquired a game called Brookhaven. And what's interesting is that it's a massive game, but yet it has no music in it yet. So we're gonna try to fix that.
Interesting. Let's talk about AI. Obviously, tremendous opportunity for the industry. There are plenty of risks as well. How do you think about it with regards to the current portfolio that you own?
I think about it three different ways right now. I think about it as the existing portfolio. We need to make sure that our copyrights are protected. So I'll start there. That's kind of lane number one: protection of copyrights, appropriate licensing of our rights. Two, I think, okay, let's get to the place where we solve number one. Two, I think that there's going to be huge potential for how we allow fans to interact with songs. When you think about the personalization, the customization, next time you text me, you're going to get my own sound coming back at you, but maybe a different version of a song that you and I already know. I think the social aspects are going to create a whole new virality to songs that are hopefully in culture. So I'm excited by that.
Can you talk a bit more about one or two of those, just to give the
I'm
audience
making
an
like
idea?
you had Udio here, right? I missed that one, but what I think about is when you think about AI and what it can do with songwrites when it's appropriately licensed, I go back into like bringing songs into our day-to-day interactions in a way in which they cannot be used today because of the licensing models that exist. If we could figure out a way where copyrights are appropriately compensated for their use, and you and I can use it in so many different capacities. Give me a song, Dan, that you love right now.
Kendrick Lamar, Squabble Up.
Okay. We're going to take that and we're going to make that into a piano mix. So when you're having a dinner party tonight after having a successful event, you get to program your own list. So let's even make it more fun. You invite me and this entire first row to that dinner party. And I could tell my AI agent, here's everyone who's coming to that dinner party. And can you customize it based on everything you already know about this front row, me and you, create a playlist just for this group. That's where we're going.
Yeah.
That's exciting.
Yeah. I know the opportunities right now still feel like we haven't, like, there's obviously a lot great that's been happening, but I think Oliver was talking about that earlier, where it's just like we are still on the we're still in the early stages. So
yeah, and
I'm excited to see where it goes.
And third, we're using it in house, right? We're thinking about how do we use AI at Shamrock as a firm, but also when you think about how deep we are into analytics and data. We've been spending the past 2 years investing in infrastructure, software infrastructure, to be able to make sense of all the data that comes our way every day. And when you think about AI, that's just going to make us just smarter, faster. My song here, by the way, harder, better, faster, stronger, in what we do every day.
Let's switch gears a bit, because you did talk about movies, and those are other assets that you own. I know it's a very different asset class, but there's likely some similarities. I think in music, it's pretty clear where, let's say that, you were to own Dr. Dre's The Chronic, you know exactly, in general, how many streams it got in 2023, 2024. You can model that out. You have an idea of what that asset's going to be like moving forward. But something like Avatar, obviously you already own it, but how do you look at that? I feel like so much of that can be dependent on, oh, is it on Netflix right now? Is it not on Netflix? Is it, on demand here? Does James Cameron want to re-release it in theaters so it can become the highest grossing movie ever of all time again? Like, how do you model for that?
It would take me 30 minutes to walk you through that. Here's what I say. The music model is a B2C model, right? It's consumption that you can see on Luminate, and you can extrapolate a stream to $1. In film, it is not that way. It is still a B2B model. So I license my film Avatar to Netflix, not based on how many folks are watching it. It's what is it worth to Netflix to have it? And if it's the same, and then what is it worth to Amazon to have it? Was it worth it for TNT to have it? And you keep on doing that across the globe, and you start thinking about exclusive licenses, non-exclusive licenses, much more complicated. And that's also why there's less competition in film, is because just the data is not available. It's a different language. It's a different modeling technique. And so that's why I say it would take me like a half hour. With that being said, what I think is interesting is that because we look at entertainment in a 360-degree way, we see things in film. We're like, oh, we saw this a decade ago in film. How does that apply to music? Let me give you an example of this, which is you have a film, you're going to, let's say you have a $100 million film and you're going to release it on a Friday night and you put $100 million of marketing behind it. Very real numbers. And you have no idea what it's going to do until Friday night. The volatility of outcomes is very robust. And because of that, what the film studios recognize is, wow, we have this like treasure trove of IP that we've made years and years ago that still resonates with today's consumer. Let's go reinvigorate that. Let's go make that sequel. Let's go make that derivative interest. And that's where you see a lot of what works today in the marketplace. If you look at, if anyone goes to the theater anymore, hopefully so, you see a lot of sequels, right, or spin-offs. And what they did was they put their best minds, their best talent on their biggest IP that was already created. I actually think that in the music industry, when you think about, I don't know if you've spoken about how hard it is to break a new artist nowadays. It's hard, right? And so I think we're in the early innings where the music industry, I think, are going to start thinking about, oh, wow, I got this treasure over here of IP, of this music that's already been created, some of the greatest songs of all time. How do I actually think about reinvigorating it, putting my best talent internally on that as well? Because that's probably a really great way to kind of benefit two ways, right? A new work coupled with you already have the old work. And I think we're in the early innings of this. I think we're kind of going in that direction, but my two cents there.
So if a legendary artist has an original version of their work, then they put out, oh, here's a modern take on what I just did. That type of thing?
I think there's so many different ways to do it. I even look like what Elton John did. Elton John, and I think he partnered, with like Dua Lipa or Britney Spears or both, right? And once again, he was the one who was behind that, but he's taking these massive songs that existed when you and I were coming up and now making it relevant for today's generation. Or how do you create these moments where I go back to this, I use my daughter, where she was listening to Fleetwood Mac and Sade, 14-year-old. I love that music. She didn't hear it from me. How do you make sure you get that into the hands or the ears of my daughter and her peers? Mm-hmm. And you have to do that organically, authentically. And so to me, that's marketing, right? It could be the exact same song. It doesn't have to be some reimagined version. But how do you invest in creating virality and culture around the biggest songs that already exist?
And I guess you see that to some extent with biopics, right? Obviously, how much stronger Bohemian Rhapsody was after the success of that movie. ABBA and that whole voyage experience, that's another example of this. I mean, those are very hard to, pull off. And I know a lot of companies and, a lot of companies in the space are trying to pull it off. But if they do, the outcomes can be tremendous. You see what the potential is.
Correct. I completely agree with you. But it goes back to the thought of reinvesting in the content that already exists.
Indeed. All right, so we have less than a minute left, but I do have to ask, holy grail asset, if you were to go, I'm sure there's still a few of them out there, but do you still, or I guess if I could rephrase it this way, what are you looking for if you were to go all in on an asset? Like real quick, are there a few things that are intangible? Yeah.
Here's where I go. I think about two different ways. One is songs that are 4-quadrant songs. What I mean by that is appeals to male, female, young, old. Global songs that you think resonate for the test of time. You would say, like, check the box. You want to invest behind that. Conversely, I can also go the complete opposite direction and say songs that have very unique following, not unique, niche following, cult following, They have consumers who are listening to their music at an outsized pace that will make sure that their children know that this is the best music on the planet. And like when I thought about it, I was like Daft Punk, who was my intro song here. I was like, I think they did define like a moment in time, right? They are legends in the sound in which they created and are very distinct in that way. So like I think it's folks like that or massive artists and songs that just appeal to everyone that will benefit from much of the tailwinds that you see in the really emerging markets, and you think that will play well there as well.
Well, Jason, thank you. Appreciate making
Thank
the
you.
time. Jason Sklar.